Hi, I'm Rodney Johnson from Dent Research. Imagine you get a call from an uncle and he's pitching an investment idea. He wants you to help him bankroll a pool of startup ventures that have a high payoff. In fact, businesses like this have returned around 500% over their lifetime. Of course, there have been some failures. Now, it sounds good, so you ask some questions. Well, do the business owners have some experience? No. Is there a high rate of success? Nah, about a third of them fail. Do you get control over the business? Not exactly. Instead, you're actually an unsecured lender. Well, do you earn a high return? No, in fact, you earn some of the lowest interest rates out there right now. Well, do the borrowers have a great repayment record? No, they default at a pretty high clip, as a matter of fact, more than other types of loans. Well, at this point, you're going to think your uncle is absolutely crazy. Who in their right mind is going to make an unsecured loan to an inexperienced business person where the rate of failure is high, the rate of default is high, and the rate of return for the loan itself is extraordinarily low? Unfortunately, more people than you think, because this isn't much of a hypothetical. This is how student loans work, and Uncle Sam is making sure that you and I join in as lenders. The Consumer Finance Protection Board just released statistics on how this program is working out. The market's over $1 trillion strong, and there's one remaining student loan issuer out there, and it's the U.S. government, or me and you. Now, of this $1 trillion out there, $315 billion are made to students who are still in school. They're deferred, so they're not even in the repayment process yet. Of the $685 billion remaining, $180 billion are in forbearance or default. That's a forbearance default rate of 26%. Over the last several years, the U.S. saw an explosion in people who are applying to and going to college. It seemed everybody got the message that education is required for success later in life, or at least a lot of people. And that's why so many student loan borrowers have yet to enter the repayment phase. They're still in school. But they will. In the years ahead, millions of new graduates, who are also new borrowers, will hit this looking for jobs. Right now, our economy is creating about 150,000 jobs a month, a lot of them part-time, and a lot of them taken by people 55 to 64. To say that recent graduates are going to struggle to find financially rewarding careers is probably a big understatement. Down the road, we're going to see the student loan default rate at least remain the same, if not get worse. But there is a caveat. You and I, we make it even easier to pay back less than you owe. The federal government set up an income-based repayment plan where borrowers can pay back a percentage of what they make for only a certain number of years, and whatever's left is forgiven. Now, this program was given even more horsepower by saying if you're in public service, you can make the repayment term, or the number of years, even shorter. So there's even more forgiven. Now, this is like an investor allowing a borrower to make variable payments based on their profit, where the payments are never what a normal loan would have been, and then say you only have to do it for a certain number of years, and after that, I'll just forgive it all. Doesn't make sense for a business, and it doesn't make sense for the government. We're creating a growing class of educated young people who are choosing to saddle themselves with a bunch of debt because they don't really understand the economics of it. And they've been brainwashed to believe this is the path to a better life. When they reach their 20s and 30s without being able to afford to grow their personal lives, getting married, having kids, or just buying the trappings of middle class, they're going to get frustrated and demand relief. If you pay taxes, watch out. This is an investment that is going to blow up in the years to come. Thank you.